But the other space that I'm tracking, I mean, a related space is Chola Mandalam Investment that posted an overall good set of earnings. Disbursals were solid with a 57% year-on-year growth, and assets under management have seen a 14% rise. The one negative is the miss on profits owing to higher provisions. Arulselvan D, the president and CFO at Chola Mandalam Investment, joins in now to talk about that. Mr. Arulselvan, thanks a lot for joining us. I was just mentioning, how the auto segment is growing at a fast pace. You folks at Chola finance this entire pocket. Just wanted to get from you what the disbursal growth going ahead will be in the vehicle segment. So far in Q1, it's been a stunning growth of 200% year-on-year. Although on a quarter-on-quarter basis, there's been a mild, fall. But what is the trajectory expected to be going forward?
Yeah, see, the auto segment is doing well, and you're right. Taking last year Q1 as a base is not the right measure to say and look at 267% growth, etc. What we are seeing is there is a good amount of demand for heavies and to some extent lights. The used market is also picking up well because there is still some bit of an apprehension about putting a lot of money on the new vehicle, especially in the segment which we operate, which is like a 1 to 10 vehicle owner type of operator segment. So there they prefer to buy the used, and the supply side of the used also is good. So we are finding the traction very good. The tractor and construction equipment has slowed down, but that's expected because these are monsoon months, and we expect this to come back, in Q3 when the monsoons are over.
Okay, all right, we got that, sir, but if you could give us a couple of more points. What is the collection efficiency, point number one? Point number two, what kind of disbursals are you looking at from here on? Do you have, a target from here on for the year, FY23? What can it look like? Go ahead.
The collection efficiency is more than 110% if you look at the entire Q4, and it continues to be robust even in July, whereas this month. The forecast for the year, I normally don't give any forward-looking statements, but the disbursement, if the industry is growing, we should see anywhere in the range of around 25 to 40%, depending on the segments that will grow, and we will certainly participate in such a growth.
So the quarter credit costs were higher than expected. Could any thoughts on what this would look like? I mean, going ahead.
We had always given sort of an indication that our credit costs will be in the range of around 1 to 1.5%. We are in that range. Yes, it is slightly higher compared to last quarter, but that you have to factor in the fact that last quarter we had also reversed some of the management overlay, while this quarter we have slightly increased the management overlay to be in line with the AUMs that we are building it up. So the credit cost will be in the range of around 1 to 1.5% of the average assets, which is in line with the pre-COVID levels.
I just had one follow-up to the point you made earlier where you said that expect tractors to come back post-monsoons. But this month, we've seen a big fall in tractor sales. My question to you is this: do you expect to see some stress on the asset quality side from some of these vulnerable pockets, say tractors, MSME, the rural focused areas in the quarters to come? Any stress in NPAs?
The monsoon this year had been a little bit of while overall averages seems to be good, but there is a little bit of a mismatch in, if you look at the geographical pockets. Well, in some areas it is in excess, some areas it is still in deficit. So we will have to see how those areas get covered. Actually, over excessive monsoon also is a bad news, and deficit beyond a point is also bad news. So we need to see how that pans out, and then we will have to look at how the collection efficiency in these particularly impacted geographies happen. But generally, the rural economy, especially the tractor, we have not experienced that heavy delinquency levels because our selection process as well as our own follow through on the collections are quite efficient, I should say.
Okay, all right. So your NIMs, they have been stable around that 8% odd mark. Now, interest rates are likely to move up here. So your cost of funds could get impacted. What's the steady state number that you're looking at, if you could give us a broad band? And also, if I look at your new business, it contributed close to around 4% of loans. Where is that number likely to head to?
So the NIMs will, take some bit of, reduction in the coming quarters because of the cost of funds, as you rightly said, and since our large part of our book is of a fixed nature. But this, in my opinion, should not be more than 50 to 60 basis points over the full year, which we will be more than adequately compensating. Not necessarily in the first 2 quarters, but in the subsequent quarters by managing the marginal yield for the vehicle finance book. On the LAP and the HL book, we have already increased the rates, so we should not see any impact on these 2 books.
And what about new business? You can give us that number.
So the new businesses, I think it is still at 3%. Okay, you said 4%, but it's at 3% of the overall book. Yes, this is something we are looking at, and we are experimenting various options. If they really click well, they will grow. But also the fact that most of these businesses are of shorter tenor, you will see more churn there rather than they contributing a large chunk to the overall business assets.
So then, which segment will contribute to the to maximum growth in your opinion? Vehicle finance, for example, degrew quarter on quarter. Home loan, home equity. Which segments will be the big movers for you?
Vehicle finance as an asset class has grown. As a percentage of the overall assets, it has come down of our total portfolio. And in that context, if you're asking, then LAP will move up and HL will move up. These 2 segments are longer tenor products also, so they tend to move up. Vehicle finance, reduction is mostly driven by the moratorium. We spoke about that earlier, even in our investor call. So the moratorium book, which has artificially inflated because we did not have rundown in the year FY20, is started running down, and that's what you saw a lower asset growth in FY22 in spite of a good disbursement numbers that in that year. This will continue for another 1 or 2 quarters, by which the moratorium book would be fully run down. Then you should see the disbursement and the asset growth sort of matching up with even in vehicle finance. In the LAP and HL, as I was saying, because they are of longer tenor duration, the moratorium impact is also sort of spread over a longer tenor, as well as they stay on the book and they are growing much faster also as a percentage growth. But as an absolute value, they'll still remain lower than vehicle finance.
Okay. All right. Just final question, sir. We got a disbursals number. I think you said 25 to 40%. There's a lot of uncertainty, but that's the hope. AUM growth, what's it likely to be for the year?
AUM growth will be in the range of around 14 to 15% if these numbers.
Okay, 14 to 15%. And your NIMs, you said they could get shaved off by around 50 basis points, though you have some levels in place. That would be around 7.5% NIMs?
Yeah, that will be around 7.5%. But I think in the overall rota, we will be holding on because the credit cost will come in lower.
Okay. I just had one final question. You've been a leader in the commercial vehicle space for a very long time in lending, at least for over 2-3 decades now. But you also lend to other pockets, right? Not just tractors that we spoke about, but there's construction equipment, there's cars, MUVs as well. And there's so much happening in that space. I mean, bookings are going through the roof now, especially for SUVs. Is that a space that you cater to, and do you see any great opportunity there?
We really don't cater to fancy SUVs and the urban side of the cars and MUVs. We cater to MUVs and cars in the rural side, which is mostly used, quasi-business, quasi-personal, quasi-rental. It's ultimately we look at, is there a commercial angle to what we lend? lend. So these are small businessmen who buy a car or a Bolero type or a Innova type, which they use it for their own personal purpose, their own business purpose, and during say, festival seasons, etc., they rent it out also. So they have multiple ways of putting the asset to use. So these segments are growing, but it is not at growing fast. Thankfully, the travel and tourism is picking up, so this will come back because they also depend on this, like trips to Sabrimala, trips to 3D type of things. They engage their vehicles in, so that helps for them to keep earning and maximizing the potential of the vehicle.
All right, sir. Thank you very much for joining us and running us through what you make of the business, providing us with some outlook as well. Thanks indeed. The market's up 70.